Welcome to this analysis of UK listed iron miners. Please remember I'm doing this just for fun. Speak to a financial advisor before doing anything. So I've gone through the precious metals and mining sector, and actually BHP Group and Rio Tinto are the only two large iron mining stocks, both currently offering great dividend yields. In terms of the sector, these two are actually the largest stocks by far in the whole sector, but I find the sector grouping kind of useless for assessing actual iron stocks because large numbers of the stocks in this sector are actually gold miners, which are obviously influenced by completely different things. However, by going through all of these stocks, I can tell you that BHP and Rio are actually the two only ones that are mainly involved with iron ore. The most important factor affecting these stocks is actually the price of iron ore. We can see that for many decades it kind of didn't even have a price, but then from around the year 2000 onwards, the price started going crazy. There is, though, this baseline increase in the price of iron ore that we can see. There is kind of quite an attractive technical pattern here. And what I'd say is that although we're hoping that we follow this long-term trend upwards in terms of the price of iron ore, we're obviously at tremendous risk at this point if the price was to go crashing down from here out of that triangle. So in terms of the price of iron ore, we're definitely in a wait and see moment here with regards to the technical pattern. Now, 98% of iron ore is used for steel making, 70% of which is imported into China, and much of the steel making in China is for properties and infrastructure projects. So immediately we've got to think about the China risks. Is the Chinese economy just about to go through a massive deflation? And then obviously there's, as with all investments at the moment, there's a Taiwan risk. This is something to think about. But with regards to steel production being the most important factor actually linking to the iron ore price, I've got here the worldwide steel production in orange, and you can see that in line with this trend for the price of iron ore, we can see that from around the year 2000, the worldwide steel production shot up as well in concert with that. However, ever since about the year 2020, we've seen it dip down a bit. What would be good for the iron ore stocks would be to see this trend then continuing to shoot up following this brief consolidation. But at the same time, you've got to have a bit of hazard at the moment at this trend. You know, you worry, well, has this topped in terms of worldwide steel production? And so I've added that here to my risk register. And then what kind of links the steel production to the iron ore price, which you have here in green, is the rate of iron ore production relative to steel production. And you can see that when in the past the iron ore production was lower than the steel production requirements, that's when the price shot up. And then conversely, like around the year 2014, when iron ore production exceeded steel production, that led to the price crashing. Currently, iron ore production is actually above steel production. So this to me is a bit of a yellow flag. Now, obviously, if steel production was to go shooting up, that would kind of correct this problem. But the fact is, given that you'd always want to catch this in a kind of underproduction situation, we're not in that now. We're in a slight overproduction situation at the moment. And that for me is actually kind of a red flag at the moment for wanting to go into this sector. And I would say that if the steel production wasn't going to shoot up at this incredulous trajectory, I'd be looking for iron ore production to drop down to this level here where it was in around 2018. I also looked at inventories of iron ore at the Chinese ports, and it's kind of, in the short term, it's kind of on the high side. Here I've got the steel products inventory versus steel products orders. And we see in previous boom times, this up here is a Rio Tinto share price. In previous boom times, lots of orders and low inventory. Whereas in bad times, you'd see that trend reverse. Well, we're actually currently in the latter. The current data is one of high inventory of steel products and low orders. So looking at where the iron ore comes from, and actually, unlike some other resources, in the case of iron ore, there is actually a good diversity of locations where it's coming from, and it's mostly nicey nice places like Australia and Canada and Brazil. So in terms of the iron ore supply, that's not something that we have to really worry about. In terms of the steel production, though, that is concentrated in China, with 53% here in China. I've got here a graphic of what the steel's used for, and you see half of it is for buildings and infrastructure. So half of it is kind of economy doing well kind of things, and half of it is for state spending kind of things. And here I've got the apparent use of steel and the true use of steel. This true use data kind of takes account of exports and things. By the way, all this data is coming from the World Steel Association website, but it's kind of a little concerning that it's so overweight China, particularly when you compare it with perhaps India or North America or the entire EU. There's something a little unnatural looking about this. We see here the overall trend. So yeah, we know that China, have been becoming the manufacturing place for the whole world. But we've got to accept that a lot of this is for state-controlled construction projects, and really, that's probably been overdone. I do worry that we're at peak expansion here, and I do worry that we could be at an inflection point where the China demand's going to wane. So in terms of the kind of macro fundamentals, I'm definitely not wanting to go into iron ore stocks now, mainly because I am a bit worried about technically what's going on with the iron ore price, particularly in light of all the events going on in the world at the moment as well. And I'd want to see kind of confirmation of us following this trend a bit. And then when I looked at the kind of inventories information, and then also the iron ore production in relation to worldwide steel production, again, this doesn't look like the perfect setup for trying to buy at the bottom, which is a shame because when we look at BHP and Rio Tinto, they're both offering massive dividend yields. And even at current iron ore prices, they both just made 8 billion last year. And say in the case of Rio Tinto, they made 8 billion in net income, but their market cap is only 80 billion. So they do look really cheap and offering massive dividends. It's just technically they do look really nasty. And I do kind of wonder, is this the kind of the markets predicting what the iron ore price is about to do before it happens, perhaps? But given the kind of cheapish valuation here, I definitely want to learn a bit more about these stocks, a potential opportunity in the future. But I think it's just worth waiting out a bit what's going to happen with China and the iron ore production versus steel production situation. So that completes this video on the iron miners stock sector. I'm going to follow on with some short videos on BHP Group and Rio Tinto. Thanks for watching. I do videos like this one just for fun as a hobby. It's for entertainment purposes only. Always consult a qualified financial advisor before making any investment decision.